starting a new business and you wish to run it as a startup in India, then you should be knowing about these rules, regulations, exemptions that the government is being providing to startups. Right from the definition of a startup to what are the tax planning tools that startups can follow, we are going to discuss everything in today's video of Commerce Gyan. So stay tuned till the end of this video so that you understand in detail these key factors of startups. First thing we'll discuss is what exactly is a startup. Second important thing we discuss is about the taxation and other exemptions that are available to startups in India. Third is startup funding. Fourth is how women entrepreneurship is designed and how the government is encouraging women entrepreneurship in startups. And finally, we are also going to discuss some key factors why startups are failing in India in spite of all these exemptions and benefits, and see to it that your startup is not one of these failed startups. So let's begin the discussion in today's video of Commerce Gyan. So currently, this is the number of startups that we have in India, 2,07,682. The data that we're going to consider in this particular video is taken up from government official websites. So first of all, what is a startup and what are the key factors that you need to keep in mind when we are talking about a startup? When we say startup, I'm sure you must have in your mind a number of names like Zomato. Zomato is the one of the names which is quite successful as a startup in India in the recent time frames. So can I have a proprietorship organization and say, okay, now I've started a business and it comes under the head of startup? Well, you'll have to refer to this particular definition to understand whether yes or no. So the DPIIT has given a clear understanding of what startups are. So what is this DPIIT? First of all, it is the department which is started by the government in terms of promotion of industries and internal trade. So the government plans to make in India, it plans to have more and more startups in India so that there is employment generation, there is less reliance on external trade. As I told you, proprietorship, if you start and say, okay, it's a startup, no. Startup, clearly the definition under this DPIIT says that startups should either be a private limited company, an LLP. So LLP is what? Limited liability partnership, or it can be a registered partnership firm. What is a registered partnership firm? Registered partnership firm is not just any firm which you go to a lawyer and say, okay, on a 500 rupee stamp paper, I make a partnership deed and that is it. No, partnership deed should get registered under the Partnership Act. This is very important. So even if you make an agreement, a formal agreement, yes, it will have some amount of validity, but it is not considered as a registered partnership deed, not considered as a registered partnership firm. So you need to be very careful when you're doing a partnership. Many people today are preferring LLPs, limited liability partnerships, over the startups in the format of registered partnerships. So if you plan to expand your operations abroad, like in the format of exports, then it's very, very essential to consider private limited or LLPs because this has better recognition in countries abroad. Now, suppose you are already running a business, right? It's just 2 or 3 years old in the format of a private limited company. Can you still be considered as a startup? Well, the definition says that if that business is not older than 10 years, then yes, you can register as a startup on the government portal. So even if you are already running a business and you want to go for it as a startup and get all the benefits of startup, you can still do it. Entity that is coming under the startup should not have a turnover of more than 100 crores in the year. So 100 CR is the limit, the cap on the turnover. So if your turnover goes above 100 crores, you cease to be a startup. Now, not just any business will be coming under the head of startup. Basically, government says that we prefer companies who are working towards innovation, improvisation, research, development, and having some kind of processes or services which can actually benefit employment generation, or at the same time, you can say that it should have some scalable business model. And absolutely, very importantly, it should be an original entity. So if you already are running a business 20 years old and you split that business and say, okay, now the new business activity, which is now a split company, will be the startup. No, it's not allowed. So it should not be formed by kind of splitting, merging, acquisition type of activity. The new entity should be an original entity, not formed by such splits of old business. So great. If you wish to start with such kind of a business and want to register it as a startup, what should a startup do? Or a startup should, if we have to speak of what startup should do, is one important thing is clearly define the problem they can solve. Now, basically, in India, you have tremendous opportunities because there are massive problems in certain areas of our day to day life. So, if you consider urban areas, there will be problems connected to maybe transport, commuting, deliveries, food deliveries, and number of things. If we speak of problems in rural areas, maybe they have problems connected to any kind of agricultural development. So, there are scattered lands. Is there any activity which can bring together this land? Massive scale cultivation can be done, large scale cultivation can be done. So n number of things are there if we go to really see the problems existing around us. So what the government says, what a startup should do is first identify the problem and have a solution for that particular problem. Basically, not just this particular thing, but they should be able to clearly define that problem which they want to solve. So that problem, if it is clear, only then you can go and move to a solution, isn't it? If we have to see a startup which was connected to the fintech, that means if we take examples of the UPIs and online banking and such kind of things. So if you remember the name of the company, Razor Pay, we often see that when we make online payments. So this is a startup with a very good example where they defined the problem of online payment systems and then they found out ways and means how they can solve it. How they can do this? They can do this with lot of market research, which is very important. Now, often we find startups face problems because they just push in the market all the funds and start doing the business. Maybe they go on a very large scale without testing, which creates issues. So the third important point, what startups should do is test it. First, try and do a pilot launch, test it on a smaller group, smaller area, which seems to be like the bigger problem. So once that test is complete, then you can move ahead to the actual solution of the bigger problem with a massive scale of operation, with with larger amount of funds and so on. So for this, the startup should create a clear roadmap how they can actually solve this particular problem. What would be the investments? What will be the stages of their operation? So year one, what will they do? How much will they invest? What will be the activity? Which area they will target, and so on. Second year, how will the business look? Like we often say, when we talk about an interview process, what do? We ask the person ahead, say, where do you look at yourself in the next 5 years? So when we ask that person this question, what happens? The person starts building a roadmap. Oh, yes, I want to see myself as a manager of a particular company after 5 years. I want to see myself as the CEO of a particular company after 5 years, and so on. So, exactly this is what the startup should be doing. They should have a clear vision in mind. They should have a clear roadmap in mind where they want to reach in the next 5 years and start working on it with proper projections, with proper understanding whether that is feasible or not. To encourage these startups, now several government organizations have put their foot forward and started giving exemptions, benefits to startups. So our next area of discussion is important benefits that you should know that startups get in India. Now, which are the government bodies that have notified these benefits? It is the MCA, Ministry of Corporate Affairs, CBDT, that is the Central Board of Direct Taxes, SEBI, Securities and Exchange Board of India, RBI, which is the Reserve Bank of India, IRDA, which is the Insurance Regulatory and Development Authority, and of course, Ministry of Labor and Employment. So all these have come together with several notifications which you will get on the startupindia.gov.in site. So this can be utilized as an understanding for the purpose of your startups to get benefits, exemptions which the government have notified. The first important thing that they have changed in the past is they have changed the definition of turnover. In the beginning, we saw that a startup is the one which has 100 CR turnover. So capping is 100 CR. So below that, if you have the turnover, you can be considered as a startup. Earlier, this definition was 25 crores, which means a person, if exceeds 25 crores, it ceases to be a startup and ceases to get all the benefits, which is not so good, right? Because the smaller business, when they scale up, they should also get the benefits, right, of the exemptions and the benefits that the government has provided. So that's why this definition change is very important. Also, from the point of view of investors, if you see, investors would want to invest in different companies which are also growing and expanding, right? So if a startup has grown from 25 crores to let's say 50 crores, it would face challenges in gathering more capital as a startup because now it ceases to be a startup. So those organizations, those investors which are ready to invest in startups now would say no to it because they cannot put in money because it's not a startup. Government has given benefit of cross-border mergers and it has relaxed these rules and made it more simple. Razorpay, as I told you, is an example of a startup, and here in terms of cross-border mergers, Razorpay acts as a very important marker. This startup, which was founded in the year 2014 by Harshil Mathur and Shashank Kumar, has actually changed the system of digital payments in India. Now, there is a Y Combinator accelerator in the US. Basically, it provides funds to Indian startups, to various startups also abroad, which this Razorpay company was the first fintech company to get funds from. So Y Combinator is like a launcher where investors and these startups come together. Now, if this particular company wanted to be back into the Indian situation, it doesn't want to have any kind of control from abroad, then the foreign company can merge into Indian company very easily. So this is what exactly has happened with Razorpay, and now it stands to be the Indian company holding maybe some assets abroad, but it is the main control is in India. From the income tax point of view, long-term capital gains was one issue which the startups faced, and this was changed and modified for the startups. Earlier, unlisted companies and listed companies has separate kind of treatment for capital gains. Now, if a startup is not a listed company, doesn't have listing on a stock exchange, it would face problems, because when the shares were exchanged, shares were traded, shares were handed over to somebody else, there would be capital gains, right? So this capital gain would be taxed at a higher rate because it is an unlisted company. Now, for the startups, the government has brought these two definitions, that is the listed company and unlisted company capital gains, under one same tax structure. Even in the case of startups, when they are selling their equity, the whatever the gain, the long-term capital gain happens, that will be taxed at 12.5%, which was earlier 20%. So people as investors will be encouraged to put in money into the startups without any fear, because now if I put in a startup and I sell my stake, I will have to pay 20% tax, which will be a big problem. So this problem was removed by the government, and now it is taxed only at 12.5%. Now, tax holiday is given for startups which are registered up to 31st March 2025. So, eligible startups, eligible is a very important word. What are the eligible startups? That you can get more details on a Startup India site. But what we are here to discuss is that there are eligible startups which can get a tax holiday up to 3 consecutive years in a 10 years time frame. So, if you are registered as a startup before 31st March 2025, from this year 25 to 35, you can get a tax holiday. No tax is to be paid for 3 consecutive years. These 3 consecutive years could be any three. So, starting 5 years if you suffer a loss, and after that you start getting profit. So, sixth, seventh, and eighth year also you can claim this tax holiday. So, as long as you don't cross that 10 years time frame, it's done. You can get the tax holiday. Also, if you had losses faced in the primary years, initial years of your startup, you can carry forward these losses for 10 years down the line. So if first 5 years was a loss, then you can carry forward this loss to the 6th, 7th, 8th, 9th year. So 10 years from the year the startup was founded, you can carry forward the losses, which is a huge benefit given. Another key area is the startup funding, which is very essential and important in our discussion. Government of India has given the what is called as the startup seed funding. This is an important step of encouragement from the government and for startups. Now, what is the seed funding? We'll discuss a little later, but let us first understand, why do startups need funds for? Now, first obvious reason why the startups need fund for is obviously market survey, understanding the product, getting the prototype ready, correct? Then once that prototype is ready, it is successful, then you can go ahead with the launch of your business. And for the launch of your business, you would require setup costs, including registrations and other formalities. Then what will come ahead is assets procurement. So in the setup cost, initial setup registrations and all those formalities are done. Then what comes up is you will buy the assets for the setup. And to run these assets, to run your business, you require what we call as working capital, day-to-day capital, like paying salaries, repairs and maintenance, transportation, and so on. And finally, when you're running the business, you're going ahead with the business, you may also want to improvise. And so for improvisation, what you would need is research, right? So further research, further improvisation in your product, for that also funds will be needed. What type of funds can be made available in the market? The first is the equity funds. Equity is the owner's capital. So if tomorrow an angel investor comes and says, I want to put in money, he may want to put in money in the format of ownership rights. So like we often see on shows like Shark Tank, where they go and say I will invest 5% stake in your business and I will give you this much of funds. So what is my share in your business? So they say, okay, 5% equity shares are got by you. So this is basically primary way of having the funds raised, which is in the format of equity owners capital. Second format is what we call as debt funds or loan funds. Debentures would be there. You would have loans from banks and so on. Then government also may step up and say, okay, we provide you with grants. Grants would rarely be given in the initial stages till you prove yourself, right? And most of the time startups are business oriented, so they don't get much of funds in the format of grants unless and until these grants are given on private basis. What we have seen is in the long term funds, long term scenarios, you get these. In the short term funding also, you may have working capital loans, you may have short term loans given by banks and so on. Now let's look at the startup from the angle of an investor. If you want to get an investor put in money into your startup, you need to understand what the investor is thinking, correct? So what will the investor think, and will he invest in your business or not will depend on several things. The first important thing he will look at is what is your objective and problem solving. So as I told you, you first understand, identify the problem in the market, and then find out ways and means to solve it. Then he will also look at the sustainability and scalability of your business. Is your business worth it? Will it expand? Will it have a sustainable time frame, or is it a short time frame business? So there could be a very successful business in the short run, but it may not survive the long run. So investors may not be very keen on investing in such a business. The next point would be, what is the competition for your business? So already if there are organizations like Swiggy, Zomato, and other such food delivery things, and you are a startup which is looking for food delivery in cities, same cities which they are already running, then the investors would not be very sure of your business sustainability because already the market is saturated and there is so much of competition. Next, the investor is also going to think of whether I will have any role, whether I will have any rights in the management of the company or not. As I told you, he may even pitch in for going for ownership in the form of equity. So he may demand some part ownership of your company just to be sure that he is going to look at the company from inside. So he knows what exactly is going in the company. So if he's putting in money, he may not want the company to be like going in a direction which he is not knowing because his money is at stake. Finally, he will also be interested in looking at returns. What would be the prospective returns your company can promise? Whether or not there are in a quick time frame you will be able to start getting returns. So there are some companies which may take 10 or 15 years to really start earning profits and substantial profits, but maybe investor may not be keen on investing in such a company. He may want quick returns, so he will have to look at what are the returns that your company can give when it is expected that you start generating returns. And he will also be keen on understanding exit options. So think of, you put yourself in the shoes of that investor. Obviously, if you're in need of money, you may want to liquidate your stake in that particular company, right? And so he will also be keen on doing the same thing. He may want to understand whether tomorrow, if I'm in need of money, is it possible to exit from that business, sell off the shares? Will somebody be ready to buy my shares or not? And of course, are you ready as a startup company to allow this exit? Coming to the startup seed funding, which the government has arranged for. So government says, okay, we also contribute to your company, we also contribute to the startups in the format of what we call as seed funding. Starting, we also provide some help in the form of funds, which of course would be coming in the format of loans, repayable. Interest rates may be less in comparison, but will be providing you with loans. Now, is the government of India directly giving you loans? No, this is what we call a SIDBI, Small Industries Development Bank of India, which is actually having the government's funds, which is infused with nearly 10,000 crores of funds in the current situation. So these funds go into the schemes, but not directly. They go through some other company, some other channel, which we call as AIFs, which is Alternative Investment Funds. There are currently around 129 alternative investment funds. You can search online, you can get the list of all these AIFs which are ready to give funds to startups. Now, I will be sharing with you at the end what are the websites that you need to refer to for the purpose of startup funding and other methods to get the information about startups. What the government did in 2023, they found that startups are there are investors, but they cannot connect directly. So what they did, they started off with a platform in March 2023, where it was a platform meant for startups and investors to come together, register themselves there, and know each other. The key features on this portal, what they do, they are having investment opportunities. So startups list their names there. Then they have investors who are listed there, and then algorithm matches. I want to invest in AI education, startup which is going for AI education, and there is a startup already registered for AI education, and it has put its name in the on the website. Then with algorithms, they will match me as an investor and the startup. Also, it allows the startups to go for the cities where there are emerging business opportunities. So they understand opportunities also on this particular portal. Plus, they are also having like a virtual marketplace creation. So they know exactly where the startups can actually put forth their business. Next comes is women entrepreneurship in India. Why there is a certain focus on women entrepreneurship? This is a very important thing for startups. Now, startups, if they are led by women, they come under the head of women entrepreneurship. So why this is important is because the India wants to remove this gender biased culture in startups. They want even women to participate, come forward for forming startups. The important thing in India is that there are many small businesses which are already run by women in the villages. If you see many Mahila Udyogs, and there could be like, if we take best examples like Lijjat Papad, and there are pickle manufacturing companies, there could be handicraft companies which are already there established in villages. Women are running them, but they don't have the grade of a startup. So if these pitch in themselves as a startup company and go forward, they can have exports, they can expand the business operations, and already running business can actually put forth a separate division which can go into the startups. Now, another important thing is for the women, and not just women, many even other startup founders, what they need is training. They need business training and improvisation of their organization. So the startup portal actually helps out such type of people who are in need of this training and development. Now, I'm giving you certain useful links. Look at this. First thing where you will find the resources is the startupindia.gov.in. This is a very useful site. You will get a lot of insights about startups on this. For women entrepreneurs, there is a separate portal which is wep.gov.in. And what they do here is they connect you to mentors who can guide you on different areas of your startup. It could be finance, marketing, even softwares, then development of, you can say, office space, how you can put in automation into your business, and so on. There could be n number of things where you can get mentors to guide you here. Plus, you can also connect to investors. So not just that, there is a connection which is developed between the startups and investors, as we discussed earlier. Now, coming to a very important aspect as to when you have a startup, it's very good. We always think of business as a going concern. It is going to move on into the future, continue its operations in the future for a long duration. But in India, the situation is not so good. It seems that startups are failing in a massive way. So, if you look at these statistics, it's very bad to see that 10-12% of the startups actually have closed down by the year 2025, and there are in fact 80 to 90% of the total startups which are seen to be failing in the first 5 years of its business, which should not actually happen. Now, why the startups fail? It is very important. If you start with a business, you should be aware of certain things before you actually go ahead. Put in your precious money, put in the investors' money, and have collaborations, have establishment, have employees hired, and then problems start coming in. That should not happen. So for that purpose, we should understand even the failures of startups. So here we want to discuss the key areas or key points why startups are failing in India. The first important point why startups fail in India is because they lack a market fit. Why certain startups succeed is because they are well suited to the Indian market, Indian requirements, and what type of culture we are in. So if you lack that market fit, if you don't identify yourself in that market fit, so online, if you're introducing an online business or online portal in a maybe a small town or in a village area, it will not succeed, right? No matter how good your startup is. So if it is not fitting in the correct marketplace, it will not succeed. Then, secondly, you will find that there is poor financial planning. You find that finances and other things are not taken care of in the early stages. So, even before you put in the money, you should have project reports, you should have budgets prepared. You should understand what is the market stake, what are the percentage of returns that are expected, how many years would be your break even point. So I'm sure those who are doing business, these type of words maybe you've never even heard of. Capital budgeting, working capital planning, all these things are very much important when you're going for a startup. So without this, your startup is bound to fail. So to avoid that, you should be very careful in the initial stage itself in terms of financial planning. We find that even if everything is done well, when the execution part comes, it doesn't succeed. So why? Because the team is not good, the employees hired may not fit in, or there are issues, technical glitches, because of which your customer base is eroded in the beginning itself. Then we also have, in spite of government giving so many benefits and concessions, yet we find there are still a lot of statutory and regulatory hurdles for every single business and not just startups. So if you look at a simple process like GST registration, so earlier this process was made quite complicated. There were issues faced in different states where the GST registration was taking nearly 4 months, 5 months to actually go ahead. So a business owner, he cannot wait for 4 or 5 months to get a basic regulatory activity, basic registration to be completed. So maybe government is making few changes, is enhancing systems, is doing better things, but it is not as fast and as quick as needed. So regulatory hurdles are still a big challenge in India. And finally, we have in the format of very saturated and competitive marketplace. So if you're entering into a marketplace which is already having the players who are similar to your business line, you will face issues and you will not be able to stand competition because they may have been running the business already for the last 5 years, 10 years, and you have just entered. So your business may not stand unless and until it has some USP, unique selling points, something very unique, something very special, and something which will touch upon the market requirement. These were the key understandings about startups. There are many more things also, but everything to be discussed in club together in this video is not possible. So I've given you the general idea, the basic ideas, and some key websites which you can refer to when you are having a startup. So hope this helps in your journey of business ahead and it helps you to develop your business in a better format. So such important and interesting facts which are connected to Indian economy, law, regulations, any areas of commerce, industry, and also certain basic concepts of economics and finance, you can refer to our channel Commerce Gyan India and subscribe to this channel so that you don't miss out on any kind of such videos ahead. So hope to see you in the next video of Commerce Gyan. Thank you.